It's my pleasure to introduce to you Andy Lombard, VP of Innovation and Venture Development at ACA, longtime sponsor and supporter of Startup Week and all things startups. Andy, I'm going to let you get right into it because you have an esteemed panel here with lots of great things to say. Take it away.
Thank you so much, Katie. And again, congratulations on another successful Startup Week. And if those of you are not familiar, we're having a whole month of Arizona Together startup. You guys have all been so generous in offering your time, and what an unbelievable panel. If I had my business plan handy, I would probably forego the panel and start to present to you guys so I could get some funding. So great group. We're not focused on one specific stage of company today. We are not even focused on one specific area of funding because Kyle's joined us from Trinity Capital, and we have a venture debt group. We have a startup initial fund that Hamid is going to share with us. Also Clay Gordon, who's a seed VC. Marin Aspinall, general partner of fantastic group that's been just doing wonderful life science and med tech investments. Of course, Todd Belfer from Canal, longtime VC and serial founder. So, and Leib, Leib, we're so glad to have you guys at Greyhawk, which has been a stalwart in Arizona. So, well, let's just kick it off. We want to do three things today. The first is we want to explore any macro trends that are occurring. Obviously, we've been through an incredible year. You know, I look at our statistics from an investment perspective. When we look at the Arizona Commerce Authority, we have about 110 investments that we really closely monitor. Those are in our portfolio of Arizona Innovation Challenge. It has been a record-breaking year for them. It has been a record-breaking 2 years, actually. We have over doubled the amount of capital that those companies have raised in the last 18 months, meaning it's a 10-month portfolio, and over the last 18 months, they've doubled the total amount of capital. We're at about $700 million of total capital raised of those 110 companies that we have granted. And like I said, about 360 of that was raised in the last 18 to 24 months. So some good stuff's happening. We track the 9-month period from actually now it's 10, almost to close of our fiscal year. And that has also been on a really great track. So early stage capital is happening. However, there is so much more to do. So I want to kind of look at the macro trends across the board on that. And let's first of all kick off with Clay, if you can give us your intro on Stout Street Capital and then macro trends, and then we're going to go right across really quick. Thanks.
Yeah, thank you, Andy, and excited to participate as well. I'll be pretty quick because I know we have a good amount of panelists as well. Stout Street Capital, we're a seed stage VC based in Denver, Colorado, actively deploying out of our second fund, usually target about 30 companies per fund. We do a ton in Arizona. We've led our last couple deals in Arizona as well. Very bullish on that market in general. We usually look for companies generating a little bit of revenue in the software space, industry agnostic, and then we'll lead or either co-invest. And then to the point on macro trends, I would say that, you know, talent is becoming a bigger problem than capital at the moment. You know, we had addressed this more with the Unmet Jobs Conference that we partnered with ACA as well. And we are seeing these SPACs being providing liquidity in the later stage venture market that we see as causing inflation in the early stage ecosystem. So those are trends that we are seeing. And I'll pass off right there.
Let's go to Leib first and then to Todd.
Good morning. Thanks again for having me. Great to be with everyone over here. I'm Leib, Bolel partner at Greyhawk Capital, Arizona's longest, most established fund here. Very proud to be in Arizona and to continue to see the growth of our ecosystem here. Our focus is investing in B2B software companies, generally Series A, Series B, post-revenue, normally generating about 2 to 6 million in annual recurring revenue. On the macro trend side, we're seeing, you know, a little bit of what Claire had mentioned, both on the SPAC side, valuation. Very fortunate to have 2 recent investments at very good valuations. We're always looking at undercapitalized markets. That's where the majority of our investments are. I think we're all going to see new technologies coming out addressing the pandemic and how companies, whether it's going to be on the recruiting side, whether it's going to be on the healthcare IT side. Really across the gamut, there's areas that can be addressed, and we're seeing current portfolio either offering new things. Many of them are just sticking to their core grounds and seeing, how they can capitalize on their existing market. But I think markets have really expanded in many areas because of the pandemic.
Thanks, Leib. Great explanation. And by the way, just for those of you out there that have not heard of what a SPAC is, I really hope you do search what it is and get to learn it. Essentially, it's a special purpose vehicle that allows that is essentially a private investment that brings a company public in a very rapid manner. It's kind of a not backdoor anymore. It's just a process of going up public, which is exits for VCs, which makes that pressure a little bit firmer for the valuation pressure. So Todd?
Thanks. Good to see all my fellow panelists. Good to see you, Clay, and Hamid, Leib. And I'll start a little bit with the second question. I agree. There is massive inflation in the labor market, and you really got to have a good value proposition and an exciting opportunity to attract top talent. You're going to get B and C players all day long, but the A players are being very careful on where they go, making sure they're funded, making sure that they have the right team in place, the right culture, and they're not taking a tremendous amount of risk because they don't have to in today's world. So I think it's critical that you're funded, you have great leadership, and you have a great value proposition to attract top talent, especially in Arizona. And then Canal Partners, I started the firm in 2008. I think it was the week Lehman Brothers went bankrupt, and thought it would be a good idea to start a venture capital fund in Phoenix. And our value proposition is we invest in early stage B2B software companies in underserved markets. Similar to Greyhawk, we're a little bit earlier. We're sort of 500,000 of ARR to 3 million. We're actually funding one now that's not quite at 500,000 of ARR. It's maybe right below that. So we will have a little bit of latitude to go a little below 500,000, but we try to stay in underserved markets such as Southern Cal, Arizona. We've done a handful of deals in Atlanta, one in Colorado, a couple in Texas. So we're really early stage B2B. We're capital conscious investors, which is probably what differentiates us most from other VCs. We don't want 4 or 5 rounds of capital. We want the founders to be the largest stakeholders in the sale of the company, period. So at a 15 exits, that's occurred more than 50% of the time, where the founders are the largest shareholders in the company upon exit. So there's no dollar amount. It could be 2 million of capital, it could be 10 million of capital, but we're not one of those guys that are going to raise 50, 60, 100 million of capital in our portfolio companies. It's very capital conscious, and WebPT was a great example. I think there was 3 million of capital put into the company before they got to 60 million of ARR. So, that's our goal. That's like the epitome of what we're trying to do.
Yeah, I love it, Todd. Thanks. The founder-friendly approach in terms of making the founders the largest investor or the largest shareholder is huge. I'm sure that came from some background of yours as a founder. Kyle, Trinity Capital, what a huge, huge year, a little bit under the radar screen for some of you out there that don't know who Trinity Capital is. You need to know who Trinity Capital is. I don't want to steal your thunder because I know you have a tremendous last few months that you'd like to kind of announce. So I'll let you go for it, Kyle.
No, you're doing a great job. You can keep going. Thanks, Andy. And it's great to be here and participate. Trinity Capital, Andy's referencing going public. We did go public earlier this year through a traditional IPO. We've been around since 2008, providing loans and equipment financing to venture-backed companies. Growth stage, Andy also mentioned we do a little bit later stage, and we really define that as kind of Series B to Series D. We do kind of creep into A, and we creep in a little bit later, but we've got 60 portfolio companies. We write checks currently up to 30 million. Industry agnostic. So, I mean, we see everything from software, SaaS to kombucha, frontier tech, and rockets. The general theme is these companies are growing rapidly, and they want an extension of runway that's non-dilutive to go alongside of their VC dollars they've raised, so they can achieve milestones and build that valuation heading towards another fundraise or liquidity event. So, as I think about, what do I want to share about the kind of growth stage and from a macro level, what are we seeing? We see incredible activity. It is a good time to be raising money, and deal activities at an all-time high. 69 billion deployed just in Q1 for VC dollars. And that's a lot of that is later stage, 100 million check sizes or higher, but it's still just a growing and robust market. The thing that I track that's not just deal activity and dollars deployed is fundraising activity, which was 80 billion in dollars raised for VCs in 2020. And just Q1 alone of 2021, we saw $32 billion raised. And so that, to me, kind of in the past has shown a robust market for a couple of years to come as those funds deploy those dollars in the marketplace. So good time to be raising dollars, and a very, obviously a very busy time for anyone in the growth stage sector.
That's awesome, Kyle. Thanks. And by the way, congratulations. So happy to have you guys headquartered in Arizona. What a wonderful.
I didn't mention that. I'm long on people working in offices together. We signed a long-term lease in downtown Phoenix in the middle of COVID. So we're really excited. We're moving in next month, 1 North First Street, right in the heart of Phoenix. So we couldn't be more happy. And we've been hiring. I think we hired a dozen folks during COVID. The mess. And we're continuing to hire. So we're really excited to be in downtown Phoenix.
And just one clarity point, Kyle, I want to, at least for my own edification, you are side by side on VC still only, or are you doing independent deals as well?
So we are focused primarily on independent, institutionally backed companies. So they have raised venture dollars. Our average company's raised 20+ million of venture. And if it's equipment that we're providing, we do not need that institutional support, but primarily we're looking for companies that have institutional backing and looking for 6 to 12 months of additional runway.
Thank you. Mara, let's go to you next. I mean, just such a great story with the success you've had in the medtech side and life science side, and creating what is a wonderful fund, and then investing in a couple of Arizona companies, and also just great performance. So just happy to have you here, and thank you so much for your leadership.
Thanks, Andy, and hi, everyone. It is great to be here. Here for me is in Tucson. So it's great to hear people in downtown Phoenix, but if you want to go to the rural part of the state, not quite, but come down and visit us in Tucson. So Bluestone was started 3 years ago to be focused on, we originally called it the NATO states, the Mountain Southwest, New Mexico, Arizona, Texas, and Oklahoma. And yes, we have a little bit of fun that if we added Colorado and Hawaii, we could be the nacho states. But we have made the majority of our investments in Arizona. And we've made 3 investments so far. We have exited one of them. And the one that we exited, we sold to Exact Sciences, which has been really fantastic. Our focus is, as you said, Andy, medtech. We call it, diagnostics, devices, and digital health. Those are the key areas. Our investment timing is focused on a late Series A, early B. I think it was Todd who talked about capital efficiency. That's a big deal for us. We haven't found anything on 3 million in capital with 60 million ARR, but capital efficiency is critical, that companies who can move forward in the effective use of capital. What we look for, everybody will talk about founders. So what we'll add to that, and I don't mean to dismiss it, we do as well, but what we'll add to that is we like founders who, when we get in, can talk about how we get out. And in the midst of that, I like to say the only wrong answer is IPO, because while IPO might happen and a SPAC might happen, we want companies who can take conscious control of their environment and start talking to acquisition partners from the very beginning of their history. We like companies in revenue, or at least soon to be in revenue. So we're reducing the technology risk, and we're all about commercialization. And we will announce another portfolio company outside Arizona, probably in 2 weeks, in the cardiac device space. So we're looking forward, we're growing fast, and it's great to be here in Arizona. What we have found here is what I like to call diamonds in the rough. Companies here with great teams that many of the bigger venture capitalists on the coast don't always know about. So that's the focus.
Thanks, Mara. Appreciate that. And last but not least, Hamid. So great founder, has done so many wonderful things in software startups here in Arizona. You and your teams, you and your wife decided to embark on the investment side. You've been supporting founders for so long, kind of under the radar, supporting their investments as you moved along as well, but now you formalized it. So share with us your launch, and thank you for doing early stage investing. I really do appreciate it. Hamid?
Thanks, Andy. And hi to all my friends as well on this call. Yeah, so I've been a software founder, and I've been mostly heads down. My wife and I have both been sort of operating a couple of software companies locally. One is Axosoft, one was PureChat. And last year, in the middle of COVID, we actually had an opportunity to exit both of them, which started actually pre-COVID, but the deals both finished during COVID. So, you know, we've been supporting founders and entrepreneurs and active in the local sort of startup community for some time. We've been investing through a vehicle called azdisruptors.com. And we've been in deals like Campus Logic, which we had a great exit from as they raised significant amounts of money. And we've been in a number of local companies like Air Garage and Prenda and various others. But we decided to sort of formalize it a little bit more and dedicate $10 million in investing largely in Arizona, looking for the earlier stages where check sizes from us would be somewhere in the neighborhood of 25,000 to 250,000. Probably the average check size will be 100,000. And if you divide it out, that's roughly about 100 companies that we expect to invest in over the next, hopefully, short period of time, but realistically, it'll probably take at least 3-4 years to get there. But yeah, we're super excited. The criteria are all laid out on azdisruptors.com. If anybody is interested, you can actually pitch us directly there. And those pitches come directly to me. So I usually provide an answer within a week or follow-up questions. And I've been having a little bit of fun. I started a podcast called AZ Tech Podcast to highlight what other founders and investors are doing. And in fact, I even had Todd Belfer on the podcast who had some great advice on the pod. So you know, if anybody is interested, AZ Tech Podcast, check it out.
Awesome. Thank you so much, Hamid. That's just great stuff. I want to go back to Arizona a little bit and focus in. Each of you are very, very familiar with the state, obviously, either investing or living here. So the talent side, way back when I did a very large Series A with Battery Ventures, and it was about a $40 million raise, and it was in Scottsdale, Arizona, and they put the money in. But right after the money's in, we had a very interesting first board meeting. Was I don't think you can hire all the wireless network engineers and salespeople that you need in Arizona. So move the company. So we looked, and you know, I begrudgingly at that time in 2000 moved the company to Dallas, Texas, and went from 0 to 400, 500 employees very, very quickly. I definitely would not do that today. Obviously, having some of the experience I've had, but also because I'm seeing that no matter where you go, you have that talent issue. It's not a unique issue to Arizona. It's just now, how are we dealing with it? So I want to deal with that really quick, and we'll rapid fire. You guys can kind of raise a hand and I'll kind of direct it over to you. Is that a critical investing thesis issue now? Is it with the founder, the team? Can they build the team that they need? And I know that varies from segment to segment. Mara might have a much different answer on that than Leib or Clay or Todd. So the question is that front and center? And then how are you dealing with that? And how is that coming into your reference scope in terms of investability?
I'll jump in there. So there's a couple of things. Number one is I moved to Arizona to hire people at a software company I founded in Des Moines, Iowa, and not a lot of talent that we needed over there. And I knew that we needed to look at another location, which is the reason why I moved. The talent that we have here was we were able to hire out of ASU primarily. There's Andy, we know each other, I would say, from a different role, you know, where I am working with companies out of Israel coming to Arizona, and we see this often. We're seeing it within our portfolio as well. We're working with companies that are looking to grow workforce by up to 1,000 per company. These are significant scale-up companies. So the fact that we're seeing this in Arizona, we have a company coming, executive management coming to Arizona next week to look at these opportunities. We're seeing it consistently. That's one end of the spectrum. On the other side of the spectrum, I've spoken to companies that have been here, well-established companies that we all know, and their executive management has said they've hired 500-600 people over the last 3 years, and 50 of them have been in Arizona. So I think there's two different spectrums that we're seeing. I think that specifically the scale that the population size is growing in Arizona, we're seeing talent coming in from everywhere. I don't think there's a better time to hire in Arizona. Companies, our local companies, are continuing to grow. And I think it's just a matter of the resources and the resources that are available and being knowledgeable about them. I think that we are continuing to grow on many fronts in Arizona. And I think on the talent side, we'll continue. We've got great academic institutions. We've got people moving in from all over the country. So I think it can only go up from where we are now.
Thank you. It's always better to have a third party say that than me. So Leib, thank you. I couldn't agree more. I'll go through a couple of anecdotes on that, but I wanted to see Mara, go ahead.
I would agree. I think one of the things that Leib said that's critical is the role of the universities. I think in the past, the universities have not been as proactive, and many businesses have not been as proactive and have found our Arizona universities difficult to work with. That has, I don't know, about 180%, but that has changed a lot. And working with University of Arizona, NAU and ASU has really helped us source long-term employees as well as just interns for the summer, which in the current environment, you want people, very quickly, and they can be anywhere. So I think that the role of the universities is very strong. We're not unique as the only place with strong universities, but let's use the facilities that we have and the connections there. I've also found that with people who are hesitant about moving to Arizona, we've had a couple of portfolio companies that have hired them. This is pre-pandemic, to work remote, get them to get comfortable with Arizona, because many of East Coast people have not spent a lot of time here, have them here on a semi-regular basis. And then I would say 5 out of the last 6 we've hired have decided to stay and move here. So I don't think about it as so black and white as are they here, are they not here, but use the networks and then bring people here.
Thank you. Clay?
Yeah, I just really want to piggyback off what Mara said, because I think it's a really good point. And I think ACA in general has been a really good foundational resource, such as programs like Venture Ready and Venture Madness for at least South Street, where we can get to know entrepreneurs for a couple of months, get to see how the business evolves, and then potentially lead that seed round, and then ideally bring them more national attention for investment to, again, grow operationally in Arizona as well. But I did want to highlight 4 key industries that I am pretty bullish on, at least specifically for the Arizona market, and that's software, EV, battery, and then manufacturing. I know Arizona's had a lot of really good positive press within the last couple of weeks on bringing manufacturing jobs to the state, but those are industries specifically that we're very bullish on for the Arizona market. And I feel like, again, to Mara's point, I do think there is foundational resources available. It's just really getting the knowledge out to companies outside of Arizona that they will have the necessary resources available when they relocate here.
Thanks. And just a couple of comments on that. So obviously we've read all the news that Intel is now creating 2 fabs here, TSMC previously another fab. being from Motorola, and previously very, very involved in the M&A side with Motorola, our employees in Arizona, we had 19,000 employees. For those of you who remember Motorola, we were the largest employer. So bringing in semiconductor is a very, very, very big thing for this state. It is huge for us all from a technology perspective. I've seen it. The supply chain that comes with that, the spin outs that come with that, the growth sectors that come with that. Clay, you've mentioned EV. You can't get around it. That's going to be part of the customer base and the connectivity of that ecosystem. By the way, with EV, we really consider EV and battery this, in the similar sector, and we are seeing an enormous influx. We are very busy right now, just dealing with all of the different inquiries and proposals and companies and wins that are coming in. So that's a huge thing. I just want to capture this for a second, and so you understand, 19,000 employees isn't changing too much. That was one fab for Motorola. Obviously, the technology is very different. We used to build a fab for $1 billion. Now it seems to be a $10 billion fab. The technology is obviously a lot different now than it was when Motorola was in its heyday, but there are going to be a need for so many employees. What we've done strategically to win those deals and to nurture those deals was a lot around workforce. It wasn't just writing checks and everything else. It was how can we take what we have today and build that new workforce of the future, because it doesn't exist anywhere in the world, that is required. You just have to have a process. So I think the comforting part that I just love the focus right now is the focus on developing that technology workforce and doing what we need. And Mara, you astutely said the universities and also the community colleges play a role. Also the private sectors play a role. Our AWS, our Amazon partnership and putting IT upscaling. And we're seeing a ton of technologies now that are used for employee upscaling as well. Taking like a less skilled workforce and making it a more skilled workforce through AI and machine learning through those tactics. So pretty cool stuff going on there. And for me, I think workforce is one of the critical items. It always has been, by the way. It's kind of my point to that, 15, 20 years ago, man, you better be there. But anyway, I think that's a big thing. I'd like to shift a little bit and talk a little bit about early stage capital. And I'd like to talk about it in Arizona. And I'd just like to get a real quick view. And we can go right around the table. We'll start with Kyle and kind of loop around really quick. I'd just like to see your view of where we are in Arizona on early stage capital. And that I'll just define as, all the way up maybe to Series A. It's really pre-revenue stuff and so forth. So if we could go forward and just give us your opinion of that in Arizona. And then if you have a couple of anecdotes or ideas, let's probe that as well. Kyle?
Yeah, I'll give you a couple thoughts. I think the conversation has always been about Arizona. There's a lot of capital here. It's not invested in technology, and it's in real estate, or some version of that thought. And there's been some bright spots and some things that have come throughout COVID that I think really benefit Arizona. And I talk to my team about this a lot, and that is a lot of these legacy ideas of needing to have a company within a stone's throw of you to invest in them. This is a kind of a Silicon Valley approach to investing historically, where you want them close, you need them close. That's gone out the window, or it's changed. And so what I've told my team, and it applies here as well, is these long-term legacy, ideas and thoughts, and the way you raise money and the way you go get money, and the relationships, it's all been broken down. And this happened in 2008, it's happened again. And there's an opportunity to go out and establish relationships that will become the next kind of legacy relationships, the next 10 years. And the door's wide open to get those conversations going and to get those meetings set up, and people are willing. I mean, most parts of the country are still sitting in their house, and they're available. And so to those willing to reach out and be politely persistent and aggressive, it doesn't matter if the money's not sitting here in an office in Arizona, or if those are, those funds are not based here, that money is looking outside of what they used to, that geography they used to. And that is a good opportunity. I think it's a very good thing for Arizona, and for companies looking to raise capital. Just a couple thoughts.
Yeah, that is so cool, Kyle. And I can't even tell you how many times I've told the story 10 years ago when we started the Arizona Innovation Challenge and when we started Venture Ready Accelerator. All that was off of that Obama stimulus funds that came out of the 2008 disaster and so forth. What has been so cool over the 10 years we've grown, I'd like to see us take the next 3 or 4 years, or maybe 5 years, and see how we can compact that and take the leverage we had accomplished over the last 10 years and accelerate that growth. A couple of quick things. I think all of you are aware, and some of you have participated. Stout Street and ACA teamed up on the Unmet Arizona Conference, and through that we did 2 virtual conferences. We wanted to do them live, but we couldn't obviously last year. I'll just give you kind of an anecdote on that. We have over 100 million raised out of that. Not all Arizona, but out of the companies, we had 50% of the companies were Arizona. And we introduced over 300 new VCs to the state of Arizona. They may have heard of us, they may have seen some of the founders, but that to me is where I think we need to continue to keep going and introducing them to great deal flow. Todd, I'd love to hear your thoughts on this, on the early stage side. You've been raising money a lot in it, and also funding money. So I'd love to hear your view on where it is today and where you think it needs to go.
Well, you're kind of hurting my investment thesis, because part of my investment thesis was that it was geographic arbitrage.
Yeah. By the way, apologies in advance, guys, but for me, it's more the merrier.
Yeah, well, from 2007 to 2015, we were usually 1 of 2 or 3 term sheets and going into a deal now. And then it's great for the community. It's great for the economy. Now, obviously, with technology and the internet, it's like so much easier to get connected to anybody across the country or the world, for that matter. And it has changed the game quite a bit because, really it was geographic arbitrage and relationships before. Now it's more about, trying to find the right deal for the right fit of a company. But, we're very interested in having companies that are local, but that we can partner with and help grow. So, getting back to the earlier point of human capital, we've really helped our portfolio companies on the human capital side. And we've had to replace CEOs or C-level people, and we use our network and Rolodex to try to, replace those people with people we know to reduce the risk. Because the last thing you want to do is replace a CEO, CFO, and then you find somebody else there who's actually a dud and you got to get rid of them. So, part of our success and the reason we have a top quartile fund is because of, I think, our human capital component. But like Clay and Hamid and Leib, I've gotten, and Kyle, I've gotten referrals, early stage stuff for all these folks, and vice versa. I've given referrals to people on the panel as well. So it kind of creates a community locally where we want to keep the dollars locally and on this panel, and then some others who aren't on the panel. You do business with people you like and and I'm not going to refer a deal to somebody that I don't know. But on Kyle's point, we just wrote a very large check to a company in New York. I never met the founder. I never met anybody there. And I wrote a big check. I got to tell you, it was very nerve-wracking. I'm like, I'm writing a large check to a guy, I've never even met him. What if I'm getting scammed here? So it is a new way of doing business. And I'm more old school, where I want to get to know you and have 5 or 6 dinners with you and meet your family. And, that's changing drastically, and COVID accelerated that. So I guess I got to get used to sort of the new way of investing and doing commerce.
Todd, does that kind of stay the same for you, you think, going forward in some sense? Or are you going to just switch back to the old school style?
I mean, I hope it goes back to the old school style. You know, I prefer it. That's the kind of person I am. But I suspect that even with COVID completely ending in the future, I think it's going to be a hybrid where you maybe have 1 or 2 meetings and then you fund a deal. I don't think, I know I probably won't fund more deals unless I meet the founder or founders. But I see a lot of VCs funding deals with ever shaking a hand.
Yeah, I'd love to hear from Hamid on the question in Arizona. I know that, you know, obviously you've put your money where your mouth is, you know, and you're walking the talk on that. But I'd like to get your view of where you think the early stage funding is currently in Arizona and what you're doing about it.
Yeah, I think, you know, it's been an issue, early stage funding, just because the investment size from companies or basically VCs that are investing in Arizona at the very early stages has not been significant, right? Nowhere near the sort of Boston or even Denver, certainly Seattle, Austin, those places. So that's been a source of frustration for startups and founders for a number of years. It's a lot better today, and it has been a lot better in the past 5 years than 10 years ago, for example. So that's good news. And as soon as companies do show a little bit of traction with respect to revenue, if their revenue hits $1 million and they're on a sort of fast growth pace, not only is there funding available to them in Arizona, but outside of Arizona, investors are now they have to go to other locations because of you know, there isn't that many companies that are reaching those level of success, but there's a lot of money that comes in. So you know, I think there's still opportunity to improve things for early stage, and I think that's where we thought that we could actually make a difference in Arizona, which is why, you know, our 10 million is largely focused on that early stage. But you know, there does need to be some refinement of, you know, pitches and founders, and the number of opportunities is also not as great as there needs to be for investors. So it's sort of a catch-22. Both sides of the framework have to evolve and be built, and that's happening. I feel like the snowball is starting to go.
I'd love to get a read, if we could, really quick, and you guys can just unmute and give me just a quick read on this. Trending upward, staying the same, trending downward. Quality of founder interactions, whether that's the pitch or whether that's just the, you know, overall interaction that you're having, and specifically Arizona, if you could.
I'm going to say trending upward, and I think it's probably more peer-to-peer interactions, and they're interacting with peers that have succeeded with raising rounds and asking what worked for them and getting feedback on how to pitch and what investors are looking for.
Yep, I'll say in life sciences also trending upwards with more incubators and spin-offs, people leaving larger companies, so they're somewhat sophisticated on what it takes to build a company.
Let's go Todd, Kyle, Leib, if you could.
Yeah, I would agree. I would agree with what Clay said. It's, you know, there's so many more founders and so many more people that have had successful exits that are willing to help, willing to spend some time. But the other thing that wasn't mentioned so far on this program was there are probably 30% of former CEOs of Fortune 500 companies have homes here, usually second homes or third homes. And I know several of these folks, and they run their family office, and, you know, but they're here, and they're here 30, 40% of the time, and they're having dinner and lunches, and they're playing golf, and they're bored. I talked to one the other day who's a founder of a multi-billion-dollar software company, and he's like, I'm bored to tears. He would love to mentor and talk to kids or founders about their pitches and their decks. And we just got to connect these people, right? We got to connect these people and find out how to get these people connected.
Yeah, Todd, let me just, not a commercial, but many of the people on this call have participated. So Venture Ready Accelerator huge opportunity for them. This is time in, simple, no pre-assignment, no homework. You come in efficient, timely, you go. You can participate in a mentoring side, or you could just give that direct feedback. So Lisa Willard, if you could just post the venture ready side, and then Todd, I'll connect with you, man. We have 450 EIRs, mentors, coaches, and advisors. Now, obviously, it's more of like a 90-10 rule. 10% of them are super participative, and the others are, we'll call on them. But we've got a place for them. We really do, and we've refined that over the last several years.
Yeah, and a lot of these folks, as you know, are not going to be that organized to go do something like that. But if you make an introduction to one company, to one founder, this person might actually meet with them and help, right?
Yeah, exactly. So the way we organize that really quickly, we have one lead EIR that really does all the work, and then they bring in other resources as needed. That's where that person can come in for a quick lunch meeting and so forth. So we can definitely work that. Leib, trending upward, stationary on founder interactions, and Hamid too, if you could, and then Kyle.
Yeah, we're seeing definitely an increase both in terms of quantity and quality. A couple of things that I wanted to mention relating to this is that we have a strong portfolio in Utah. And something that we've observed and I think would resonate is that many of the successful companies that are out there, their founders are reinvesting back into the community. We've got a company up there that's valued at probably about $3 billion now called Lucid. We had a company with a conversation with another company of where the talent from there came out, a different company where has been partially funded and has been mentored by by the executive management there. And it's something that I think that really resonates what Hamid is doing. Local founders over here, they are taking the successes and deploying that capital and their time. I think it's going to have an everlasting effect. And we do have a great, I would say there's a couple of dozen of active investors in Arizona that have been successful in Arizona. Some of them are quieter than others. What we've done as a fund on the tail, we're raising our third fund. We're just on the tail end. We're going to be closing that shortly. Is that we've brought on about 50% of our capital has come from, well, I should say 50% of our investor base are local Arizona technology executives. And we're seeing that have ripple effect. That's been both strategic and has been beneficial in many areas. And I think with these different initiatives that are going on, where local tech executives are reinvesting, whether it's the capital and time, that's going to have a significant effect within our ecosystem.
Super important. I completely agree and have talked about it a lot. You have the Domo effect, the other effects that Utah has seen very quickly, those second generation and now third generation founders, which we need more of. This is not a slam on Todd or GoDaddy or, look, but we've had great successes. We just, by the way, not to you, Todd, I'm thinking of LifeLock. Look, we've had great successes. LifeLock, GoDaddy, we want to keep going in there. So I'd love to applaud, first of all, Hamid, what you're doing, man. And that's why I wanted you on this panel. I want to focus on that. I also like to just shout out, Greg Scoresby is doing an unbelievable job of doing that process and working very, very hard on that with his success on Campus Logic. Clay's done that, or Clayt Mask has done a lot of it, but we need more of it. We need those successes to kind of rebuild that next generation of founders and help them, nurture other new founders. And their executive teams are going out and being successful. Their past executive teams. It's like that football tree. If you follow NFL football, those great coaches that have, everyone else kind of comes out of their lineage. I think that's a lot of what the startup world is about. Kyle, can you comment on that? What are you seeing?
Yep, I'll touch more on the ecosystem, and I would say it's one of the reasons. It is the reason why we are moving to downtown Phoenix and planting our flag there. I think everyone on this panel and others attending are interested in seeing the ecosystem and investment and technology grow and become more robust. And it's doing these little things like Todd just mentioned. Connecting mentors, Trinity, we actually built an auditorium right in the middle of our office that we're going to offer up to the startup community, and we're going to help and leverage our VC. We see over 600 deals per year in this VC-backed space, many of which are referred by top-tier venture capital firms, and they're always asking, "Hey, what's going on in AZ?" And so we intend to kind of leverage those relationships to make connections. But I think it's a combination of all those things. And for us, we've built our business here, and we love Arizona. We want to see it succeed. And I think there's a lot of people now that have that same mindset and mentality. And so we're gonna do a little bit. And I think there's enough people now, like Hamid said, there is that snowball effect. There's that flywheel effect where there's enough momentum. And I think with some density, it could be really special. And so we're committed to being a part of that.
It's so cool, Kaya. Thank you for that. Hey, a couple of comments in the chat I just want to shout out to. So Adrian, matchmaking, we just launched what's called the Arizona Innovation Network, which one of the goals of that is to matchmake founders and mentors. So if you can contact Lisa Willard, her contact information is there. We'll get you set up on that. And for this panel as well, we'll be reaching out to you. This is a wonderful tool. We're also going to do a lot of deal flow activities. Dean, on the hard tech funding, couldn't agree more. We do have one here though. Panacea Ventures originating from Canada, moved their US headquarters from New Jersey to Phoenix. Leib, it's in your old offices or close to it. I think they took over the old Greyhawk offices behind Chelsea's Kitchen there, but they do hard tech only. So really cool stuff there. And by the way, keep your eyes out with the semiconductor investments that are being made here. Hard tech's coming back big time. So there's going to be a number of product investment vehicles that will start to emerge from that. So listen, we've got a few minutes left. I'm gonna settle back and just want to thank you. I'm honored to be a part of this ecosystem and to have such unbelievable partners in that. So I want to thank you all for that, the leadership that you're providing. Let's close out by having each of you just give your last words and where you see it going next, or whatever you want to communicate to this group. So we'll let you guys take the stage from here. And let's go Mara first, ladies first.
Focusing on life sciences, there's never been a better time to invest in life sciences for diagnostics, for tools, for digital health. The pandemic has only helped, but the key is finding companies that are good for the pandemic and good beyond that. We've invested in GT MedTech in Phoenix, Pix Health in Tucson, and we continue to see strong technology, strong companies, strong founders go forward. So we are high and very optimistic about growth of the ecosystem, not only in the tech areas that many of you are in, but in life sciences and making Arizona a top 10 destination in the country.
Thank you, Mara. Let's go Hamid.
Yeah, like so much of the sentiment, I'm super excited and bullish, obviously, on Arizona, on founders, on tech, on software, on SaaS. And I think that there's a lot of opportunities. And, you know, what's great is that things like COVID are so disruptive that it sort of like hits a reset button. And you know, like I'm an optimist in that, like, I always look at all the positives that come out of it right now. You know, we don't have to have in-person meetings or fly all over the place for investments and to evaluate companies because everyone's used to working remotely. So that's a huge positive that came out of COVID that I think is going to have some enormous ripple effects that could potentially be very, very positive for Arizona-based founders, especially. It's already had a huge impact on pay. In the past year, people in tech in Arizona, they've seen their pay go up substantially more than average, largely because, well, now, you know, Silicon Valley companies don't have to pay $250,000 for a software engineer. They can pay $150 in Arizona, but $150 is like 10% higher, you know, 15% higher than what they would have had to pay before. So super bullish, love what's going on. I'm also excited to meet with as many founders as I can to help them in any way I can, including writing some checks. So I'm happy to be in the fortunate position that I'm in, and I'm super happy about where Arizona is as well. So I'll
Thank
hand
you,
it back.
Hamid.
Is that me?
Yeah.
Yep, go ahead, Leib.
Yeah, okay, thanks. I think it's important for all, for all of our listeners, definitely on our side, and I think I'm speaking for the panel. We may be investors by profession, but we're people at heart, and I know a number of you on the panel. We're here to help, and I think we have a great ecosystem here. Many people that are still trying to get, whether it's product market fit, their idea, they're looking for a sounding board. And we are a small community when it comes on the investment side, but we do have large networks and experiences to be able to help. So I'll tell you, on the Greyhawk side, if we can be of resource, even if you're not going to be a B2B software company generating 2 million, but you're looking for a sounding board, always happy to dedicate some time and jump on a phone call. You can hit me up on LinkedIn. And I think I know a number of everyone here on the panel as well. We are generous with capital and generous with time. And we're really happy to be in Arizona and to be part of the ecosystem and seeing future successes.
Thanks, Leib. I'm so glad you mentioned that. That's awesome.
And Andy, before I go, big shout out to the ACA as well for everything that you guys do here.
Thank you very much. Notion of an inviting ecosystem, inviting community is, quite frankly, my view of the unique competitive advantage of Arizona. It's just an incredible ability to be able to come into an ecosystem and know a lot of people in about 2 months. You can meet almost everybody, and everyone is willing to spend their time. So that's unlike a lot of markets. It's very easy to get acclimated here, and that's, I think, a great reason why we're growing so much. Clay?
Yeah, I'm going to continue the bullish nature with my sentiment. Yeah, so I would say Stout Street, like, we've invested in 20 plus states. We do a little bit in Canada, and I would say Arizona is by far the most collaborative between state entities, private sector as well. I've really enjoyed working with other seed funds, Series A plus, and it, top to bottom, it's been a really good deal flow source for us. I think ACA's Venture Ready program, Venture Madness, has been a good place to interact with founders, and then when they're exiting the program, a good opportunity for us to lead those deals. And then I would say cultivate and help those companies go to the Series A level. And I don't want to say pass it off to the Series A firm like Canal, but that's really where I think we've created value. And again, I think it's the synergy and the collaboration between this market that we're more bullish on Arizona than I would say any other market in the country. And definitely feel free to check out the Unmet Arizona Conference. Happy to be part of one of the nacho states. I like that. I'm gonna use that. And again, echo kind of what Mauro had said, between the universities, the ACA programs, and then our seed involvement, and then the Series A resources. I think it's getting better, and I think 5 years is going to be even better. So thanks for letting me participate again.
Thank you, Clay. We're going to go Todd and then Kyle. Thank you.
Yeah, just to reiterate, I think Andy said it. This is a very small, big town. You can get to anyone sort of, pretty easily, which is important, where some of the other larger cities, you can't do that. The other two things that came to my mind are, if you look why San Francisco, New York, Boston have become so successful in tech and life sciences, to me, it's really two to three reasons. One is the population cluster, 2, universities, and then 3, it's schools, right? You want to raise your kids in areas. And there's some things out of our control in this panel here, and other things are. But the more ASU, Grand Canyon, and other universities continue to innovate, grow, and become, top 20 universities, that's critical. That is critical. And the public school and the reputation that public schools in Phoenix has to get better. So, there are some things that we can, as founders and influencers in this town, try to influence and get other people to pay attention to this, because you know, just by having low taxes and the sunshine and golf ain't going to cut it. You know, people aren't going to move here from Boston, Chicago unless there's good schools and, you know, and have a place where they can raise their family in a safe, sound environment while getting educated. So, you know, I think I am bullish, and I am extremely proud to be a native Arizonian, and I love it here. I'll never move from here. And whenever I get a chance to be a cheerleader around the country for Arizona, I certainly am. So.
Thanks so much, Todd. Appreciate it. Kyle,
I
wrap us up.
agree. I love Arizona as well, and I'm also out there a cheerleader for our portfolio companies. I'm in conversations with a couple currently about moving fulfillment centers and maybe some of their personnel here and making those connections. And so I think about that as well. We're going to continue to make investments in Arizona. We're actively looking to make investments in Arizona. We were early investors in Integrate, Lucid, and Footprint. We want to make investments here, and we're going to continue hiring and building our team here. So I'm excited about this ecosystem and helping and just contributing and being part of that story long term. So that's where we land on it, and also very bullish and excited. And appreciate you letting me join today.
Thank you so much, Kyle. Appreciate it.
Thank you, Andy, for bringing this panel together. We appreciated all of your perspectives, and we hope that you continue to stay healthy and well. Thank you so much.